All right. Good morning, good day, good evening, depending on the time you're catching this broadcast. It's your boy Pedro again, and I really want to apologize for being unable to come up with some update all throughout last week. Serious challenges, technical challenges. Again, what can I say? I mean, we're in a world full of challenges. Nothing is perfect, and that's I think that's the more reason why it's fun world, right? Uh, a world full of imperfection. So I was here on Saturday, made several attempts, maybe 10, maybe 15, lost count at some point. Trying to come up with my update, and I was just the forces were just against me ultra that I was unable to upload all my update. I tried several times. um, I can't even really give an explanation as to what happened that day, but well, thank God for life, and here we are again. So it's basically last week we just ended, like just over 4 hours ago. Was pretty interesting in my opinion. I must say, uh, we had sort of a rough week for the market, and to me that was like a bomb. I'm sure people must see it as a bomb, but I saw it coming. To be honest, but you need to be very careful in a very optimistic world and market like this. If you followed my last broadcast, you would see that I gave the signs. Signs. I always give the two sides to the equation, to the coin. I give the flip side, and whatever it is that's happening, I give both scenarios, and I made mention. I give the hint as to why uh, as to the fact that the market was currently in a bit of a struggle, and I also made mention of the fact that our next key resistance would happen at around 53k. So I'll be dropping the link to that in the description section. You can check it out as well in case you did not see that broadcast. So I'm here again to give you the last updates on like a weekly roundup as to what transpired in the week last week, and it was a fun, interesting week, I must say. I'm sure not so funny for majority of the market, but it is what it is, and as usual, I'll be giving you unbiased update and analysis as to what's going on. So I'll be heading straight into action, and basically, last week we had the highlights. The main key highlight from last week was on May 7th. Sorry, September 7th. I keep saying May 7th. September 7th, which was on Tuesday. We had this major crash as hitting around 53k, which was expected. I made mention of the fact that our next key resistance will be at 53k, and lo and behold, that was the case. And in dramatic fashion, we crashed down to a 42k territory again, 42.8. So and I'm sure the market is still in an optimistic mode, looking at the fact that, okay, yes, that was just it dived down to move up again. Everyone is expecting like an immediate recovery and bounce back from the market, but I'm going to say this straight away, and you can quote me anywhere. The tendency of there's this expectation from from the marketplace, majority of the marketplace, that market will recover and immediately bounce back after a major crash like this. And unfortunately, it doesn't work that way. uh, the ride market tendency is, for what I've come to notice, is that after major crashes like this, markets tend to, want to um, consolidate before making any before showing you a clear direction. And I'm going to be referring to a couple of instances from the past. I'm going to be showing you patterns that have uh, come to repetitive patterns that have come to reoccur after major crashes. I'm going to be pointing a few that have happened this year so far. So far we're experiencing consolidation, which is what I just made mention of earlier. And in my opinion, this may take a longer time, and I would love to be proved wrong at the end of the day. Maybe I would love to come back here. It's still too early to call, but so far it's playing out well. I'd love to come back here a couple of days later, maybe on Wednesday, to tell you that okay, the market did otherwise, and they'll be able to show us a clear direction right straight away. But so far so good. We are almost a week after the crash. This is 6 days today, to be precise, and we're still in consolidatory mode. Then that is to tell you that what it's actually, the repetitive pattern is still in play. So I'm going to be showing you some references, um, taking you down a little bit back in time to March, after achieving the all-time high in March of just a second. All right, so back to March, taking you back in time to March, when we achieved the all-time of about 64k. Immediately after that, we had this immediate pullback, and we had something like, seemed like a sort of a pin bar, bullish pin bar, and it seemed like we're done with the pullback. We're gonna set new all-time highs again, but unfortunately there was this struggle, resulting to a formation of a lower high, and then we had this lower low formation as well. So that was like a preliminary sign of struggle from the market, and market ended up trying to rally back up, and this like battle again at this lower high point. Potential double top was to be formed. You can see the market tried to struggle again. It's also in the consolidatory mode. I'm sure this took about roughly 2 weeks, after the market tried to, was able to break out from this and form a new all-time high. So these were all signs of struggle from the market, and which we majority of us ignored, because we're all full of bullish sentiment and all, which is okay. I mean, it's the tendency. There's this excitement in the whole marketplace, the alt season and all that. So that was okay. And after getting to this all-time high of about 64k, which still stands to remains to be our all-time high till date, we had this crash 4 days later on April 18th, and this crash, first of all, invalidated this almost invalidated the last tested this last swing low, major swing low, coming at around 50.4, and the market was really able to close back up. We had this sign of this sideways choppy state for about 3 days, and instead of the market trying to rally back up and form a new higher high and the all-time high, unfortunately the market was unable to do that, and after this choppiness we went further down south, and finally the last swing low was invalidated and fully compromised, first of all by break below it, and secondly by close below it on April 24th. Yeah, so on April 24th that swing low was finally invalidated. So this was the first major sign of trouble from the market. We formed something which seemed like another bullish pin bar. We had another huge bullish engulfing that engulfed 1, 2, 3, roughly 4 red candles, and then we had other bullish engulfing bars here and here again in early May. Unfortunately, we're unable to get back and form a new higher high and all-time high as well. You can see there was this struggle here, another period of consolidation from the marketplace for roughly 2 weeks again, and as a result of this, the market was unable to go up further up and form new all-time high and higher high, and we went further down south, crashing again, and the final straw was hit on May 19th when we finally crashed down to 30k, which formed the beginning of an almost 3 months consolidation period. So you can see that after the May 19th crash, we tried to rally back up, bounce back up, but unfortunately we're still within the body of the May 19th red candle crash. So that's we were able to top up at around 42k plus, which formed the top of the consolidation, and the bottom coming at around the 30k territory. This was the box we found ourselves in this box for almost 3 months, and we finally broke out just over a month ago in early August, and we seem to be flourishing again, looking good, all grains everywhere. Bitcoin was yet to bounce back to an uptrend, but they were in a good position, laying a good foundation to bounce back up. Well, the alts were back to their uptrend already, so that has been the case. We've been flourishing, and all of a sudden we hit 50k exactly 3 weeks ago on August 23rd, for the first time since the major crash on May 19th, and then there was an immediate resistance at 50k. We made a high of 50.5, which lined up almost inch perfectly with the second to the last major swing low before the crash, coming at around 50.4. So there was an immediate resistance with formation of a bearish pin bar, which resulted to an almost 2-week consolidation period. That was another form of struggle, like I made mention of in the last broadcast. Market struggled as a result of that, and then that was another clear sign of a loss of momentum from the market, after which we finally broke out of it after almost 2 weeks. And really after breaking out, we had this resistance, which was expected again at 53k. This finally resulted to another crash immediately after getting to 53k. So after a crash like this, everyone is expecting the market, there's this optimism in the whole, the market is full of optimism of an immediate bounce back. Well, I'm here to give you, I'm sorry, but I'm not here to tell you that it's going to be like an immediate bounce back. And so far so good, that's been the case, and we're not yet experiencing an immediate bounce back from the market. We're currently consolidating, which has been the case, the trend, a pattern, a repetitive pattern that occurs immediately after a crash. We had this for 3 months, almost 3 months after the May 19th crash. We had this for a couple of weeks. We had this a couple of days here. We went further down south, after which we consolidated again before going further down south again. So I'm looking at this to be another period of consolidation after the September 7th crash, 6 days ago, and so far we're almost a week into consolidation. So contrary to what you may be seeing in the marketplace as to we getting back up immediately, that is not the case here. And I wish that we can break out immediately, but unfortunately the market doesn't play by our wishes. The whales, who are the market makers, they play by a different set of rules. They make and practically own the markets, and as such they play by their own rules and not by your own rules. So as you already know, I made mention of this in the last broadcast as well. That was even the title of my broadcast. As you already know, the market is never a straight line graph. So as it stands now, we are likely to be headed for consolidation. The crash happened on May 19th, on September 7th, and completely invalidated the last major swing low, coming at around 46,250. And not just that, invalidated more swing lows, invalidated two more swing lows, major swing lows. In total, we invalidated about 3 swing lows, and heading down to 42.8. Does revisit of 42.8 again. The 42k territory once again playing very, very crucial. It's a region that the market has respected so well. I cannot overemphasize on the importance and significance of this region. It played out so well during the last major crash. I don't want to start going into details right here again. I've made mention of this several times during the last major crash. You can see my previous broadcast for more details, but so far so good. It's playing vital again. The market has shown that they really love that area. So while the last consolidation was between the 30k territory and the 42k territory, 42k territory being the upper boundary. It seems to be like the lower boundary in this case, since the crash is happening above it. And I think we're looking at a consolidation. We're going to be ranging between these two boundaries, 42k territory and the top of this consolidation coming at around 47.4k, which was the high of 9 September, just 2 days after the crash. So far that has been the case. We are looking at the fact that the September crash validated and tested so many swing lows and they headed down to 42k, and the market closed back above 46.25k, which means the market was hanging by a thread. Unfortunately, the bearish pressure was mounted again the following day, and then the market closed below that swing low, coming at around 46k. So far the battle has been around that swing low. The market it's been choppy ever since. After it closed below it, the market tried to close back above, but these were all unconvincing closes. Finally, on Friday 10th, the bears showed their superiority and control over that territory by having a more convincing close to the downside at around 44.8. 44 was tested. We had a low of around 44.1 and a close at around 44.8, and the bulls were more like retesting that level. We were unable to retest it the following day, but as at yesterday Sunday, we had an almost perfect retest to that level, and on getting to that level we had an immediate rejection. So the market is still reacting to that level. We ended up making a high of 46,460 and a close of 46. So we, after on testing that level, there's this immediate reaction and rejection of the level, to tell you that the level is still playing pivotal and key. The battle is still around that level, and after a break below it, a convincing break below it, we are looking at a retest, and then the retest is do I say failing or holding? Rather, the bears are holding the level so strong, they are defending the level so strong. So, and as a result, we can see today that there is more bearish pressure. The level is holding so well, the bears are defending it so well, and we have seen another lower low formation on an intraday basis. We're actually closing at 44.6, which is even below the low of yesterday. So there's been a close below 46.25, and there's been a retest which is currently holding as resistance. So as a result, we can see that the level is holding so well, and then the market is to the downside of 44.6 thereabout. So if this bearish pressure continues, it's possible we could see a revisit of 44, 43, and even 42, which seems to be the downside. So this is all a clear case of consolidation. So it's looking likely that we may get stuck and locked in another period of consolidation between the 42k and 47k territory for me. So another way to look at the markets is in an markup and markdown perspective, rather than a bull and bear market, as I see majority of people do. And I think if you do this, if you look at it from this perspective of a markup and a markdown, you're going to be making life very simple for you, and less complicated, because the bear and the whole bear and bull market thing is it's pretty confusing. I mean, we had this, if you look at the fact that markets had the markup to this point, and then all you see here is like a markdown. This took, on getting to 42 on 1st August for the first time, 42.8 in the first time in a very long while. The market took the market over a month to build up to 50, almost 53k, and then it took the market just one day to crash down to 42k. Something that it took over a month to build was crashed down, was taken down in just a day. So what can we say? This is more like a markup and markdown than it is a bull and bear. So on the flip side, we should be looking at the fact that the bulls are down, but they are not out yet. They're looking at, they managed to hold their own and close the week above 45k. So they are still kind of hanging by a thread. So basically we're just in consolidatory mode, consolidating at the moment, and it's been, we're going to be looking at another chart on BTC, Coinbase, no, not Coinbase, BTC USD. Okay, yeah, I think I should do that on Coinbase. So if you remember this, yeah, remember this charts we had from before. They managed to stay above this and close the week as well above this territory. So that was a weekly close of 46k. So despite all the pressure, they were able to do that, but they are still down as things stand. As you can see, we've resumed a new week and we're currently closing below 45k again. But so far so good. They are looking safu, at least for now. So they are down but not out yet. The 21-day EMA moving average, 21 weekly EMA is still good. So the 21 EMA, as you can see here, is still, the price is still above that dynamic level. So that is still a good sign for the market. Once prices still keep staying above this level on a weekly basis, the market is still good to go. So it is, all this is still a retracement for the market, at least from this perspective. But the moment we see market going below 21 EMA again, 21 MA again, it's gonna be a sign of trouble. So far so good. We're closing, the market is down but it's still hanging by a thread. Okay, hanging by a thread. So basically that is it from the markets. And in summary of all the gibberish is that we are going to be locked in a consolidatory mode for, I think this is going to take, this consolidation, this consolidatory ride we have just begun may take longer than we are expecting. The general market expectation is for markets to bounce back immediately after a crash, and it's good to think that way and be optimistic. No one is against being optimistic, but you need to be realistic at the same time. So this is just a pattern I've observed to happen immediately after every crash, and so far it's playing out perfectly. For how long this will continue, no one knows, only God Almighty knows that. And but I just want you to know, do not panic, and just you've been through worse, or we've been through worse days than this. I mean, if we're able to, even if you are new to the markets, you've not experienced proper downtrends like we have in the past. At least if you've been to the market this year, you've experienced an almost 3 months consolidation between May and August. And we also experienced, prior to this crash, we experienced a 2-week consolidation period. So consolidation should not be anything new to you again, and it's not worse than what we've seen. It's been in a market almost 3 year proper downtrend period. So I just want you to know that you don't have to be confused and worried about what is happening now, confused about where the market is headed next. And if I need you to lower your expectation from the market. The market does not play according to your emotions or feelings or your positivities or optimisms. Market plays by a different set of rules. We have makers, we have guys who call the shots in this market, and they play by their own rules. So you need to respect that and lower your expectation as a result. The market is going to be in a consolidatory state. So far we're almost a week into that, and this may continue for longer than we expect. Who knows, a couple more days, maybe may even end today, maybe a couple of months, no one knows. But we are going to be in consolidation. We are in consolidation, and that is expected. And I'm looking at a range of around 42k plus and around 47k. So that is the much I'll be taking on for these broadcasts, and I hope you got value from this. And if you did, please share, like, subscribe, follow whatever platform it is you're going to be viewing this from, and leave a comment as well in the comment section. Let me know what your thoughts are. Tell me what your experience has been so far. Whatever it is you want to talk about in the comment section, feel free to leave it there. Tell me how last week was. Were you affected by the crash? Were you expecting the crash? Whatever it is, just let me know, and I'll be happy to respond. So remember that whatever it is I have dropped here, as usual, is for educational purpose and not to be treated as financial advice. Trading is a risky affair. Trading of crypto and other financial assets is a risky affair. Always endeavor to carry out your own research before entering any trade. So thank you very much. I wish you a lovely week ahead, a lovely trading week ahead, a lovely waiting week ahead. Consolidatory markets are dangerous markets to trade in. It's always advised to stay put and wait till the market gives you a clear direction. Even experts get wrecked here. So thank you very much. God bless you all. Bye bye.